Welcome to iGlobal Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, overnight the Australian dollar bearish cloud gathered and in turn saw the market plummet away from the resistance cap at 74.60-65 after two attempts failed to take out that level with a posted high around 74.40 to 43 is the market tumbled and now potentially holds the view towards the region of 73.20. It is concerning that the pattern has broken down quite heavily. The immediate support is at 73.70. Now, I do expect to see stops being triggered now because of this bullish candle now pressuring the bulls to probably exit quicker. Could see stop losses and trigger the move towards not from 73.20 but down towards 72.55.60. The other aspect as well is that the dollar case has actually strengthened. Now, overnight, we did see a rise in the euro up towards the region of 117.20.30 and clearly rejected that level after posting a high of 19. From the decline from 117.19, the market is now holding further to a heavy sentiment due to the fact is that I believe the market's caught in a bull trap and therefore could see further weakness towards a target of either 116.15 to 115.55. What is noted that a definition of a bull trap is a bull trap is a false signal indicating that a declining trend in the euro has reversed and is heading upwards when in fact the euro was declining. The move traps the traders or investors in the market that acted on the buy signal and in turns generates losses on resulting long positions. Well, as you can see, the market did get caught long above 117. Now, with the US dollar strengthening as well and back above 94, the high was 94.32 last night, could see a further rise up towards 95 figure. This in terms could actually see a move eventually taking on the challenge of 114.85, which is the trigger level to see the move down to 112.80. This in terms would see the break of 95 in the dollar index and rally on towards an objective somewhere around 97. Well, the dollar yen has staged quite an impressive rally from the lows of 108, from 109, sorry. And from the rebound, I do expect to see further gains. Towards 108.90 is a buy opportunity, and therefore I do expect to see the challenge of 110.45 or even higher up towards 110.85 to 111.10. Well, the pound last week, as we all know, the Bank of England did keep its rates unchanged at 0.50%. What is interesting, the voting members committee did 3 out of 9 favour a rate hike. Now, this is did put a bullish outside range day in play, but what's caused a little bit of bearishness in the night session is the fact that the Bank of England's Monetary Policy Committee has replaced Ian McCafferty with Jonathan Haskell. Now, from that, the market is actually a little bit on the bearish side because we might find that Jonathan Haskell is a little bit more dovish. Probably supports lower interest rates, but we'll see how this all untangles once we learn a bit more on that story. Nevertheless, the pound is looking for dips towards 131.40 to 131.90 as a buy opportunity, as I believe the market is still looking up towards 133.15 to 70. We're on the last support leg of 55 for gold. Now, my stop's around 52.5. If it does break there, 54 was the low last night. But as I say, if it breaks through 55, then we could be looking down towards this region that comes in around 1,200 to 1,220. I'm surprised that the market isn't staging any kind of reaction to a bull case, considering what we've been seeing over the last few months. Nevertheless, this is the last of the support levels I'm holding, and then from there I will step away and wait for better opportunities. But we are oversold, so therefore I'm not getting bearish at the bottom of the range. Silver also rebounded off that 16.15 level, but still looks a threat to challenge it again. As long as we maintain above there, then I'm comfortable to see a rebound. But if not, then we could be looking down towards $15.85 if $16.15 doesn't hold. So let's see how that plays in the next 24 hours intraday session. Friday, oil rallied 5%. Now overnight, it rallied 3.8%. Purely on the back of, again, more jitters coming out of the market after the US State Department officials said countries must stop purchasing crude from Iran. And if not, then they could find by November or face sanctions. So if the markets around the world continue to purchase Iran oil by the start of November, then there is sanctions on the way, which could affect some countries. So that's put a bit of a surge in the oil. Now, if this pattern continues, then we might be looking up towards the highs of May, which is around 72.80. I'm not a buyer at these levels, but I can't disregard the current action that's been played in the last few days, and the market is still artificially being driven up. So therefore, we could see this rise before the sell-off. The trigger level now is quite a way. It's at $67.20, so unlikely to see any real weakness in oil in the next few days. Well, that wraps up for today. Thank you very much for joining me. As always, look out for the intraday report, and I hope you enjoy the rest of the day that's ahead.